segments and geographies. I request members of the audience who are still moving about to please kindly take your seats. We are ready to start the session. A gentle reminder once again to please do remember to either switch off your cell phones or put them on silent mode.
हेलो 1 2 3 4 5 6 7 8 check नमस्कार आप सबका स्वागत है अशोका होटल
I'll once again request members of the audience who are still standing to please kindly take your seats. And with that, I have the pleasure of requesting the esteemed moderator and the panelists of this session to please join us on stage. Please join me in extending a warm applause and welcoming Mr. M.S. Sriram, Professor, Public Policy, IIMB, who will be the moderator for this session. And the speakers of this session are Mr. Nidhu Saxena, Executive Director, Union Bank of India, Mr. M.S. Vishwanathan, former Deputy Governor, RBI, and Mr. B. Mohapatra, Executive Director, Punjab National Bank. We warmly welcome all of you here in our midst. Let's give them a rousing applause to welcome them all. So now I hand it over to you to take the session forward.
Thank you very much and welcome to this session. We've just had a pre-panel discussion on how we'll take this session forward, and we thought we'll just divide this into basically two parts. One part is looking at the role of the original financial inclusion guys are the public sector banks. Not much talked about. In fact, I keep joking, I'll say who's the biggest financial inclusion player, and people keep mentioning one MFI or the other, but it's actually State Bank of India. If you just look at their weaker section advances, I mean, that portfolio itself is big enough to eat all the other small microfinance in. So that's one part of it. I request both the speakers to reflect upon the journey of public sector banks and financial inclusion. That's one. It might have been driven by policy, but nevertheless, they were the ones who sort of put it down on the ground. And second is to look at how the future looks like given fintechs are coming in, technology is changing, MFIs are there, this space is now getting competitive. I'll request Mr. Vishwanathan to weigh in from the regulatory side with all the new experiments that RBI did, with local area banks and so on. How does he look at it, wearing past regulators' hat? This thing. So let me start with Mr. Mohapatra first, and then I'll come to Vishwanath. Yeah, thank you.
Thank you, sir. Good afternoon, all of you. Just as sir has already told, in my opinion, that financial inclusion that started at the time of nationalization of the banks 1969. Then come the introduction of RRBs. Then opening of the no frill accounts. All these steps taken by the government or RBI, it is only because of penetration of the banking services to the last mile. That was in the mind. So, and the revolution, the landmark came in the 2014 when that opening of the Jan Dhan account that started. It has been decided with the government to open at least one account of a household as a banking facility. And all of you know that in that movement, you can say that is a movement, public sector banks' contribution in opening of the Jan Dhan accounts, it is a maximum 80-85% is being that contribution of the public sector banks. So all the public sectors I am taking into account. After that, the revolution of the Jan Dhan, opening of the Jan Dhan account, then with the digitization and the use of mobile phones. Then that the Jam Trinity came, Jandhan account, then Aadhaar, and as well as in the meantime there is Aadhaar also, and then the use of the mobile phones. Maybe it is smartphone or feature phones, the use of mobile phones. These three, the Jam Trinity, it has become a very effective tool for the financial inclusion. And in that process also, there is also technological developments, there are digital developments, and all the public sector banks, as of now, you can say that they are at par with the private sector banks in all spheres, giving the products, giving the services. Now, because competition has been so stiff that if you can't do that same services with ease, with that is the 3 S. In the morning it has been said that Suvidha, Suraksha, as well as Samruddhi, that has been also been in the mind of all the public sector banks. And any changes, any new developments, all the public sector, they have also tied up with the fintechs, fintech companies to give the facilities to the last mile. Then came the SSG's concept, then came the, now we are recently the government of India is having that Viksit Bharat movement that started in the 15th of November, and it will till 25th of January, it will continue. That is going on all the 267 plus villages, Gram Panchayats, that has been covered by the government of India, and all the social schemes, that opening of account, opening of Jandhan account, again all the social security schemes and Mudra, PM Sonidhi, all the schemes, they are on the spot that the bank is giving to the people. So to achieve what I say in the century, that is 2047, 2047 of $30 trillion economy, so there should be inclusive as well as growth of all the stakeholders, so that we can have that achievement of 30 trillion economy in 2047. So going forward also, there is enough scope, there is gaps, and all the banks are trying to fill the gaps in that sphere, sir.
Yeah. Good evening to all. I would just like to add to what Mr. Mahapatra, my colleague, has spoken about the financial inclusion initiative. This FI initiative, I think when I look at it, and we all would agree, it has been a major policy initiative for the bank, for the government as well. And I think it has been, financial inclusion has been looked upon by the government as a measure or as a medium to bring about economic development, to bring about social well-being. So with this broad theme in mind, the financial inclusion initiative has been actually initiated by the government. And what we have seen, more particularly in the last 10 years, that this initiative has yielded results. And there are a lot of data around to see that what has been the impact of this initiative and how it has actually impacted and created an infrastructure now which is available today to build on and go ahead with the financial inclusion initiative still further ahead. So as I look at it, the FI initiative actually stands on 3 pillars. When we started from the basic, it was to bank the unbanked population. So we must have the basic account in the bank for the individuals. So from every household, one adult must have a bank account with any of the banks. Then the next level is to go ahead and do the micro-insurance to secure the unsecured, because there is hardly any insurance penetration in our country when we compare definitely with the other larger economies or developed economies or Western economies, we all know about this fact. And if you talk of rural and the semi-urban areas, the population that is actually having some sort of an insurance product, despite this last 10 years of, giving a major push, still a lot needs to be be done. So one was bank the unbanked with the basic bank account, then secure the unsecured by providing the micro insurance, and then go to the next level. The next level is to provide them credit, access to the credit, so micro credit. And we all have been seeing the Mudra financing scheme, where the three categories of Shishu, Tarun and Kishore, they have been also one of the major initiative in this endeavor to provide microcredit to the large population. And yes, it has been a major initiative from the government, and the initiatives have been continuously reviewed, monitored, and driven for better and better performance year on year. And yes, major contribution has come in this from the 12 public sector banks, which we know as of today. And I'm sure this initiative has given the basic infrastructure now, which is actually going to be required to take things forward. I don't say that the financial inclusion initiative has achieved its ultimate goals. There is a lot of information, data that is available, which tells us that a lot still needs to be done. Maybe offhand I can share some data on how this PMJDY, the basic bank account, so today a population of 50 crore plus have this PMJDY account. And it is in the year 2023 that every household has been covered, 100% household has been covered with that basic bank account, the PMJDY, as we all know. And beyond this, this initiative actually, we all have seen the COVID pandemic times when this basic bank account this channel was used to do direct benefit transfer and see that the beneficiaries get the required help and support with minimal time that is involved to provide these benefits to them. So I think this is one initiative, but again, if we look at data, there are around 6.37 crores of MSMEs, the micro, the small and the medium enterprises. And these are very, very critical and important element and components of the Indian economy in terms of the employment they generate, in terms of their contribution to the GDP, in terms of the exports that emanate from the MSMEs from the country. Despite this importance of this particular sector, there's hardly, against 7 crore MSMEs, it is a number which is thrown as 2.5 crores which have ever been experienced credit from the formal sector. So we have made the beginning. The point I wanted to make here, that lot still needs to be done in this financial inclusion area to see that these initiatives actually bring about the end results that we all would have envisioned in driving this FI initiative.
Thank you. I think, as you said, Professor Sriram, the financial inclusion journey was a very long one. It started with the nationalization of banks, because the whole idea was that private sector banks are not expected to open branches in centers that are commercially unviable, at least in the initial phases of the time. And maybe they'll become profitable later. But over a period of time, the banks also, the public sector banks are commercial banks too, then you had the capital requirements to be met. And therefore, the profitability of branches also became an important element of evaluation of performance. And as a result, maybe some of the foray of banks into the rural areas, unbanked areas, was not as perceptive as it could have been or as much as it should have been. And thereafter, what has happened is various efforts were made, and today what we are able to see is that it has been taken to scale. And what has made the difference? Technology. So I think what we must understand is, in terms of effort or in terms of thought process, getting an inclusive India, economically inclusive India, and which meant actually providing formal credit, formal access to banking services was always embedded in our public policy. But the technology enabled us to scale it to a level that what we are seeing today, number one. So in terms of technology, what I'm saying, the entire BC framework was based on technology. If technology was not there, BC would not have been there. So let's be very clear. Number two, RBI took it to the next level of saying that we are not looking at your presence in the form of physical brick and mortar branch. We are happy so long as you have what is called as a banking outlet. And banking outlet was defined as a place where people can go and do banking business for 4 hours a day, 5 days a week. And it need not be a brick and mortar branch of a bank, it could be done through a branch. So the idea is that you are able to reach. The third element of what you call financial inclusion was the whole PMJDY. Again, PMJDY happened why? Because we had Aadhaar. What is the base of Aadhaar? Technology. Okay, so I'm saying that we have been enabled to scale up the financial inclusion effort and the outcome thereof, basically because the circumstances under which we were doing financial inclusion, making efforts in the past was different from what it is today. And I think among the there were three elements of this financial inclusion. Number one was that you need to have bank presence. Number two is that there was always a concern that a branch of a bank, which is, say, headquartered far away from the location of the branch, may not really understand the requirements of the particular locality. So there was a need for getting the local feel. And which was the reason why RBI started with the whole idea of RRBs came. Then RRBs again, because they had a sponsorship of partly the state government, partly the public sector banks concerned, and then there were some of the developments that took away the benefits of having a RRB scheme in terms of cost of provision of services. And then RBI toyed with the idea of local area bank, which is an RRB in the private sector. Okay? But the problem of all of this was that there was a limit to ability to sustainably perform business if there is a geographical limitation to the area of operation. That is the learning one got from RRB, one got from LAB, and which is also the reason why RBI, government came with the idea of what you call merging RRBs. And of course, in the process, the idea of having a local feel also got lost. Third came, then when RBI came with the idea of small finance banks, again, the idea was to have a small bank. But it was, given our experience with both RRBs and LABs, it was thought that such a model is likely to be unviable, and therefore the idea of a small finance bank, which is pan-India, but having a smallness in terms of borrowers whom they deal with, was the concept of small finance banks. Now we had the PMJDY accounts having been opened, but how were PMJDY accounts opened? They were opened by camp mode. That is, the depositors did not go to the banks. The banks went to the depositors and opened the accounts. But the branches were 10 kilometers away. So if you ask a farmer, why are you not transacting on a PMJDY account, he'll say, I'll have to lose my 1 day's wage if I have to go to the branch. Then the idea of payments bank came as a possible interconnect between the mainstream bank and the the customers, who could therefore open branches in a cost-effective manner, which is what I call as the banking outlets, and became a conduit between the mainstream banking system and the individual customers. And so what I'm saying is all these things got enabled because of technology, number one. Number two, what has technology done? Because the Jam Trinity, is the huge revolution that we are seeing in the payment system. So as we speak today, we are looking at 10 billion transactions in UPI. Okay, unseen. But last 3-4 months has been happening continuously. And what that has enabled is that it has enabled even very, very small business people to be able to receive payments into their accounts without having to have a huge cost, relatively huge cost of having the infrastructure to receive payments. Okay? So, which is why you have even a vegetable vendor who has maybe a 500 rupee turnover a day having a QR code, which is easier. And if you ask me, one of the most important steps that RBI is taking today on financial inclusion is enabling credit over UPI. So actually I was relating myself, I was just thinking, why is this done? There's already a credit card, isn't this another credit card? But please understand that the infrastructure required for a credit card payment system is much more cost intensive as opposed to a QR code payment system enabled by UPI. So if one is able to use a pre-sanctioned loan over the UPI, he is able to use it to buy products from all kinds of people without having to invest in infrastructure. So for me, therefore, multiple facets of financial inclusion, reaching the access to banking system, providing access to credit, and toying with the idea of whether local feel is the better thing or whether you need a large bank which has a small focus, small borrower focus. And I think the experimentation will continue. As part of this experimentation was also the MFI. The MFI movement was also seen as an experimentation which was kind of scaling up the SHG. The SHG going to next scale is what is MFI movement like in a way for me. And unfortunately what happens, it will happen in any case, I'm making this very clear, that innovations are important for reaching banking service, any finance services to wherever nooks and corners of the country. But innovation has to be customer-centric. It has to be public interest-centric. If it goes for, I mean, nobody is saying that you don't make money. One has to make money, otherwise they won't be in business. But I think the moment the innovation loses focus on the customer centricity, then it will lose focus on the very purpose for which the innovation was introduced, and then you will have the regulators coming. So you have the digital lending guidelines coming because there were excesses on it. There were guidelines on microfinance lending because there were excesses on it. So what I'm saying is, for me, the financial inclusion journey, I don't think the destination is anytime quite far away. It's not anywhere near. And for it to continue and succeed on scale, we need to keep on innovating. Fortunately, we have the benefit of fintechs and technology capable people in India, and we must harness them to take this forward. And in doing so, as I said, it's important for all the stakeholders to understand that the moment the customer centricity is lost, then that could run into trouble. So we have a great journey to go forward, and I'm pretty confident that given the scale in which the changes are taking place, and given the ability of scale that we can have given the support systems that we have, India will see a lot more quicker and more efficient and effective financial inclusion going forward. I'll leave it at that.
Thank you. I think I'll have a question for Mr. Saxena. Broadly, if we look at what was mentioned just now, the technology architecture, the BC framework, the redefinition of a banking outlet, payment system, UPI, etc., etc. This is the larger ecosystem, right? In this larger ecosystem, we would have assumed that largely banks should have embraced the same sort of, broadly the same sort of strategy. MFI should have embraced the same sort of strategy, and fintechs. But when you go back and look at it, you'll see that the private sector banks have behaved in a particular manner. The public sector banks have behaved in a completely different manner. Particularly when you were mentioning Jan Dhan Yojana, majority of the Jan Dhan Yojana accounts are opened by public sector banks. Now, somebody might turn around and say it is not very lucrative and therefore they have done it, or you might even turn back and say, no, public sector banks had it in their DNA to do this sort of a thing. They are able to do it profitably. Now, why, do you have any take on why, given that overall there is a liberalization of, and freedom to do what you want, public sector banks have taken a very different trajectory compared to private sector banks as far as inclusion is concerned. Private sector banks have largely outsourced it, used the BC model much more effectively, used technology much more effectively, and have not looked at it really as savings generation sort of a thing. They've used it more as a loan dumping sort of a thing. So, any ideas and any takeaways from that?
Yes, sir. I think you very rightly pointed out, and because it is the orientation probably which is different between a private bank and a public sector entity, and it is more for a societal cause. That is one, I would say, and maybe whatever investments maybe which is required in terms of putting up that infrastructure, investments that is required in acquiring the technology and enabling the technology, the return on that investments and return on the investment on the technology may not be visible in the near future. So, but let's not forget, and let's accept the idea fairly that had this infrastructure not been given, had this the technological investment and had this outreach effort to bank the unbanked population of the country not been given, the infrastructure would not have been available to us to take them to further level, the next level. So yes, I think the orientation is one of the reason, and the return on investments probably is what is perceived differently. That is one part, but when we are talking about, I think, financial inclusion and the impacts and what the inputs were and what the outputs came, I see some green shoots available now, and to make my point, maybe just leave one data here, that the Jan Dhan accounts, which are, I mentioned, are now 50 crore plus. They all put together, as per the November data, have a balance in them of 2.08 lakh crores. And if we look at the average ticket size that is there in the SB account, in that particular account, on every analysis that has come out, we have seen the average ticket size, average balance in that account has actually been slowly and steadily growing. It today stands at every Jan Dhan account has an average ticket size of 4,091 rupees. So it is slowly and steadily making some economic sense to us also. While we have opened the account, we have ensured that if it's a zero balance, if it is an account where no transactions are happening, to enable some sort of transactions in the account also has been pursued. So a lot of financial literacy has gone behind this, simply opening the account and putting it in the system and not parting the knowledge to the beneficiary that as to what this account can do for him or her doesn't serve the purpose. So a lot of financial literacy has gone behind all this, and that's how slowly, steadily we will see the cycles turning. And as I gave one small data, which will probably prove a point, that it is making some commercial sense to us as well now. And with this framework, we are able to do a lot of innovative products and services now. Knowing what the rural and the semi-urban clientele is, what is their requirement going to be, how to leverage this technology to customize products and provide to them, customize services and provide to them. So I think once this basic infrastructure is available to us, we can do it. And I think it will not be out of place to mention here that the entire FI initiative is not the credit of the public sector banks alone, because there is a very important pivotal role which the NBFCs and MFIs also have played in this. So maybe we have a country of around 7 lakh villages. The reach of the commercial banks is limited to 1 lakh villages. So it is the NBFCs, it is the MFIs which are ensuring the last mile connectivity, and they have been reaching out to this unserved or underserved population. And here again, there is a lot of collaboration now today which is happening with these NBFCs and MFIs. It is not alone they are doing, because they are relying for their raw material, which is the funds. They rely upon banks for almost 40% of their raw material, which is funds, is through bank borrowings. So now banks are lending term loans to the NBFCs, MFIs to go ahead and do onward lending. That is one. Now innovative new modes of doing business. RBI had given the initiative of coordination of loans. So a bank typically join hands with the NBFC and coordinates loans. Immediately, the coordination model had some issue, and the regulator has immediately taken a step and revamped the model through co-lending of loans. So that co-lending, I feel personally, is definitely a way forward, which will leverage on the strengths of the NBFCs. That is, they have the last mile connectivity and the access of low cost of funds which is available to the banks. And put together, we will be able to ensure that credit is available to the masses at very competitive rates or beneficial terms. So that's how I look at it. The role of NBFCs, MFIs also have come a large way in doing the FI part of it.
Thank you. For Mr. Mahapatra now. One question, all said and done, while there is a responsibility that emanates, and you do a lot of these inclusion work from the perspective of public sector bank, all said and done, every quarter you need to go back and give investor guidance and report on your profitability, worry about your market capitalization and so on. So are you under tremendous pressure on this double bottom line thing? Because at one end, the investors are calling you and talking about profitability. At the other end, you possibly are getting a call from PMO, Ministry of Finance, and other places to. So how do you manage this?
Sir, first of all the publisher banks are we say that it's a commercial bank. When it is a commercial bank, that means we have some ethics to make profit because it's a commercial bank. Second is that all the publisher banks now are listed company in the stock market. So we have every minute we see that what is the price of the bank, whether every minute, every scroll, we see that whether there is increase or decrease, because all the stakeholders, they have put up their money in the bank, publisher bank, seeing that there is going to be profit, and them also earn something from investing that also. So, being a publisher bank, we have the joint responsibility, dual responsibility. Yes, our major stakeholder is the Government of India. They are the major shareholders. So we have that obligations, our duty, responsibility, not only to the government, but to the public of the country. That is the population to whom we serve. That is our customers. And second also, side by side, being a stock exchange and a listed company, we have also looked into the stakeholders' price value of their investments. In between also, you can appreciate that doing the social responsibility and catering to the public, that is the population of the country, which is a variety of populations. That means in terms of income, in terms of language, in terms of their culture, in terms of their expenditure style, there is diversity, unity in diversity in this country. And as my co-brothers already told, every financial institutions in this country, may it be MFI, may it be NBFCs, may it be private sector bank, may it be publisher bank, or differentiated bank, just like Sarah has told, that payment bank, small finance bank, everybody has its own space in this country to function. It is unique in itself. And seeing that you have opened so much of Jan-Dhan accounts for financial inclusion, but if you see that the benefits of that opening of the accounts, yes, we have the maximum presence geographically in compared to our private sector counterparts, because our penetration across the country is much more, and we have maximum number of BCs also. So now we are seeing that whatever we have sowed in the last 2014, after 10 years or a decade, you are reaping that benefits. In the sense that small loans with the help of just co-lending or small loans with to the SSGs. Now we are seeing that only we are financing the SSGs. Now the scheme is coming that, or we are thinking of the financing the SSG individual beneficiaries for the individual accounts also. Now the SSGs has been making profits, but we are not thought of at that time the financing the individual beneficiaries of the SSGs. So there is lot of scope. We have not yet solved the entire populations. And with MSME, microfinance, SSGs, agriculture, and retail also, you can see there are enough scope for everybody. Not in certainly there is situations. So that's why there is a unique sense that side by side, by giving the financial services, financial products to each and every individual of this country, and keeping in view the stakeholders' interest also, the making a balance between the two. All the public sector banks, as of now, you can see that what is their price a year back and what is the price of today, the stock exchange price. So definitely, as I was rightly told, there is a, you can say that we cannot take it as a pressure. You can say that there is a advice from the our major stakeholder government that we should do the social services because we are the public sector bank. And as a commercial bank also, we have to look into the stakeholder interest also. And gradually, you can see that the gross NPA of all public sector banks, the net NPA of all public sector banks, and with the technological help, technology coming into place, that underwriting has also improved a lot. You can see that the fresh slippage of to NPA in all the public sector banks, they have reduced drastically because of the technology only. Because of the help of the, you can say that fintech companies and using AIs and all these technologies, now the small loans also, it is, in the morning session it has been said that now it is a cash flow management system. All the AIs, they determine how much amount we can give, how much is the risk factor, what should be the pricing. All is determined by the technology-driven, end-to-end product, from applications to disbursement. No manual intervention is being done in now small loan accounts also. So it is the benefit of technology, collaboration with the fintech companies, as well as the reach of the public sector banks through Jan Dhan account or anyway. So now we are getting the benefit of what we have done in 10 years back. That's it.
Thank you very much, ladies and gentlemen. I think we are ready for the next session and much awaited awards, which seems to be under great suspense. So we will try and vacate this place. But in conclusion, all that we can say is this has been a wonderful session where I wish there was also a private sector banker on the panel. Then we would have had a little more variety of views that came in. But I'll broadly conclude. I was talking to a restaurateur in Bangalore who doesn't serve sambar with idli. And I said, what the hell, every hotel serves either dip idli or idli with chutney. Why are you not serving sambar? He said, the day you feel like having sambar, go to another restaurant. The day you feel like having chutney, come to my restaurant. Either way, both of us, whether it's sambar or idli, we are giving you variety and we are actually helping you to quench your hunger. So therefore, possibly there are multiple ways in which we can address this issue of financial inclusion with the same regulation. So I think there is always a scope for innovating at the field on how you interpret this agenda of financial inclusion. Thanks a lot. It was wonderful talking to all of you guys, gentlemen. Thank you very much.
Thank you for making it a very insightful discussion. May I request you all to kindly accept a small token from our team as a token of our appreciation and thanks. Our thanks to the esteemed panelists and the moderator. So ladies and gentlemen, the action continues. We will have a presentation ceremony for the Inclusive Finance India Awards 2023 in the august presence of our very special chief guest, Dr. Vivek Joshi, Secretary, Department of Financial Services, Ministry of Finance, Government of India. We have already received him here in our midst at the venue.